You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to Options Insider Radio and our series of conversations from the 2025 Options Industry Conference from scenic and sunny Palm Beach, Florida. And next up in the Southern studio is a newcomer to the program and indeed to the network. He is Thomas Bonville, the Managing Director and Head of Derivative Sales at Clear Street. Thomas, welcome to the Options Insider Radio Network.
It's great to be here. Thank you very much for having me.
And Thomas, as we like to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the world of derivatives, as well as what it is you do day to day at Clear Street.
Absolutely. So I've been in the industry for approaching 3 decades now. Mostly working at big banks, bulge bracket shops. Most of my experience has been in a flow derivatives capacity. So looking at covering active institutions across the spectrum of client types for derivative products, so options, futures, swaps, structured, light exotics, etc. Here at Clear Street, I'm running the equity derivatives and derivatives sales effort, and right now, we're a fintech prime broker, so new kid on the block, if you will. I know you've already introduced me as a new kid on the block in your show, but the firm is 6 years old and growing exponentially.
6 years already. Wow, it doesn't seem like that's been that long.
Yeah. Time flies when you're having fun. And so, we've launched a whole host of products, but the core fundamental product is, a cloud native prime brokerage offering. So financing for institutions and all the analysis and clearing and custody execution that goes along with it. And, there's a real niche, a niche need for, reinventing the wheel, so to speak. A lot of the technology that's out there is antiquated. A lot of GUIs running on top of mainframe batch processing. And, the idea of the firm is to reinvent the wheel, literally. Built everything from the ground up. And, I'm part of the derivatives, taking a derivative lens on the execution side. So we built out a pretty robust swap offering. We're trading for a lot of our existing prime brokerage customers on the option side, and right now, we're gonna start to make some subtle pushes into the listed flow business in options.
Obviously, you're on the sales side, so you're client facing, and you're out there engaging with the end user in some, I think, to put it mildly, some turbulent markets out there right now. We just had the numbers coming in from OCC, overall volume up about 24%. Obviously, some external factors driving that, but it's still a wild month. It's been a wild start to the year in general. From your perspective over there at Clear Street, how has it been kind of knocking on the door and picking up the phone and calling people to talk about all these things we're talking about here in the midst of all this other chaos out there right now? Have they been receptive, or are they more distracted by the 150 points?
Oh, yeah.
swing?
I mean, everybody gets distracted by headline ping pong, especially when it, is accompanied by massive outsized moves in the market and in some instances in opposite directions. But these are the times in the market where, you got to be close to customers. You got to be close to, all of your, whether they're prospects or active accounts, and how you can help them. Nobody knows what the future holds, but there are a lot of different ways to approach the set of, probabilities that you're evaluating. So what's the best bet on the board? What's the best way if I wanted to stay long but also have a defensive posture? What if I really wanted to swing for the fence? What's, the most convex payout? And those are the, simple questions, not simple answers, and they're all have to be catered to the end user. But been doing this a long time. A very practical, pragmatic approach to what are customers trying to accomplish? What do they need help with? Is it execution? Is it best X? Is it understanding liquidity? Is it understanding, what are the ideal scenarios that you're trying to avoid in terms of portfolio construction, and, how you can access the market. And the option market is open for business. More products, more expiries, more strikes. Like there really is not, there's not a scarcity in terms of options for people to use. It's really a matter of just navigating the overload of options, if you will.
Have those needs of those clients, have they evolved? Like this time at the conference a year ago, you're probably talking to a lot of clients and users looking for, like you said, that convex payout to the upside. Have they maybe turned a little bit and looking for, hey, we need a little bit more help structuring the hedges now? Have those needs shifted a bit this year?
I think if you go back in time, call it a month ago, to Liberation Day, as the White House, I think, eloquently put it. A lot of people obviously were not prepared for the subsequent move, and that's evidenced by spike in vol, decline across asset prices. But after that settling, all of our conversations have been if and when I'm ready to add length to the portfolio. What should I be looking at? What should I be considering? Very few of those discussions have been left tail. So after you move in that order of magnitude, it's certainly not, happy days. Like there was not an abundance of people that had a ton of capital to put to use, but it was more preparing for if and when I get comfortable with the underlying tariff narrative and that impact on asset prices, what should I be considering? What should I be watching? And those were the conversations. You have to take a litany of indicators, volume, price, volatility, and kind of put them all together. And there really is no recipe that the future, but you could back test and have an idea of what historically, using these moves, what has transpired after.
I know you guys are big in the push towards 24-hour trading. You guys have already pretty much gone, I think 24/6 now. Is that the move you guys have made? So equities are pretty much almost already there. We had the Robinhood guys here earlier. They're same thing. They've been pushing to expand that equity. So the after hours on the equity market is pretty much close to de facto 24 hours now too. So a lot of our listeners, they are obviously curious about the option side of it, and they keep asking us, do we think this is going to happen anytime soon? What are your thoughts on the prospects for 24/5? Let's not go crazy 24/7. Let's just go 24/5 for options. A, do you think that's appropriate? B, do you think it'll happen? And C, is it just something that's inevitable like the equities and we all have to kind of just make our peace with it?
Yeah, well, I mean, if you think about it, options on futures and some of the, options on indices, like they already trade outside of the normal 9:30 to 4:15 hours. I mean, at some point it becomes, unmanageable for human beings to oversee computers, managing risk slides and everything else. So anything is possible in this day and age, especially with the augment of AI and everything machine enabled. I certainly hope not. I like to sleep at night. So
sleep is overrated.
Yeah. Sleep when you're dead, I guess. But listen, I've been hearing it, and I think the rally cries are a little bit louder in stocks because you have those dislocation of moves, and you want to tap into foreign ownership and foreign investors. I think in the option market, we've come a long way. You do have access to some of the broader indices outside of the 9:30 to 4. And options on futures obviously is a CME product, but I mean that does already trade a lot more than their local SIBO and equity brethren. But I've heard it. I think in all due time we probably end up following, right? Like when we started off in options, quoting in fractions and the decimalization, I think a lot of the old stalwarts in options said it would never happen. And here we are, not too far after decimalization and options, and now you trade on the run liquid equity options, and they're pennies wide. Unthinkable 10, 15 years ago.
Yeah, certainly the evolution of the 0-day side has been, you're right. If that can happen, nothing is off the table at this point.
Correct.
If you had told me a few years ago, over half of the volume of the SPX in any given day would be expiring that day and be predominantly retail, I'd have said you're an insane person. When I was in the S, we used to flee expiration. Everyone would.
Absolutely.
And so, yeah, just everyone's running towards it now. It's a completely different paradigm. So
it is.
In that world, I suppose anything can happen. Post COVID, in a 0 DTE world, anything can happen. Speaking of 0-day, the other hot contentious issue that has the conference all abuzz this year is the prospect of expanding the 0-day offerings. We've had the indexes for a while now. Those are obviously very popular. But people are always asking, what else you got? Do you have a Tesla in your back pocket? Do you have an NVIDIA? Any of the other Mag 7 names? NASDAQ finally making some progress on that front, saying, hey, we have a proposal for pretty much Mag 7 Plus. It's Mag 7 Plus, I believe, Broadcom, with some carve-outs for the earnings week so things don't get too crazy. And that's their proposal. I think it's on the docket for if it gets approved sometime end of the year, beginning of next year. A, are you familiar with it? And B, what are your thoughts on taking that route, effectively keeping what we have right now, not even changing the contra exercise, not going cash settle, anything like that, just pretty much keeping what we have now and doing effectively a limited Mag 7 pilot. You like that approach?
Yeah, I actually do. I mean, there's a lot of ways for you to synthetically create that exposure by trading, Qs or spiders or S&P NASDAQ for that matter, based on the large weightings of these mega cap companies anyway. Having the most liquid underliers in the United States and probably in the world trade on a daily basis. I think it's it is the evolution. It's the evolution of not only the retail or prop shop or, institutions that want, very, very levered intraday exposure. It's what the market is asking for. The market has told you that they're willing to get behind it, as you already mentioned, with the volume figures on the S&P and spider options, which are just astronomical. So I think the market will support it. The market is asking for it, and I think it's a great test pilot. I think at some point it becomes a little bit difficult to understand how you're going to manage the data and manage all the different expiries if every single underlier for the first 2 weeks of its existence has every day, and then it's weekly and then monthly. It does become a little data management problem, but that seems to be, something for the exchange to take up. So I'm sure NASDAQ has thought of it because they're bringing the pilot that they can handle it. And I guess time will tell whether it's a product that the market wants.
It is refreshing, whether you like it or not. It is refreshing to at least have some concrete proposal on the table. We've been coming to this conference for 3 years post 0 DTE launch, and people have been asking that question every year, and there's been nothing. So, whether you're a fan of the cash settled approach, which 2 chains, how are you going to approach that educationally, logistically, from your perspective? It would have been a big lift. Doing it this route, limited pilot, seems to make some sense. And at the very least, it's something. It's some tangible progress, because clearly there's demand. We see it from our audience all the time. The exchanges see it. They're all for-profit public entities now.
Absolutely.
They want to capture that volume. So whether you like it or not, it's something. And then I guess I heard someone did make an interesting comment the other day, because there was debate about whether we should have gone cash settled. And like, you could, instead of having 2 chains side by side, here's your cash settled, here's your not, you could just, when you enter the trade, you choose like an order type. On top of that, you choose cash settled or, your physically delivered contract. There's issues with that as well.
I think it creates a lot of issues for market makers and people on the back end. Yeah. Maybe that's a great user interface for, the client or the primary user. I'd imagine on the back end, not only operationally, but, from a market making perspective, it creates a whole bunch of other headaches.
It'd be hard to have like 1,000 go up and these 10 are cash settled and the 990 are not. Yeah, there would be some logistical challenges, which I think why they went this approach. And we'll be interested to see what the regulators say, what the rest of the industry says. And who knows, maybe maybe this time next year at OIC, we're talking about some flow in these things, which would be a fun change.
Well, it definitely wouldn't surprise me. I mean, these are the biggest companies, the most liquid companies. It's kind of surprising that you look back at the biggest companies, and when the market moves, like they're the ones that are moving as well, dragging the indices with it because of their large weightings in all the major indices. But I think what we've come to learn is like this is not a Reddit community. This is not a retail versus institutions. Like everybody has adopted these 0 DTE and short dated options, and it's not just one cohort. Everybody's participating in the volume, market makers, dealers, and end users, customers across retail and institutions. Everybody's looking at it. Everybody's using it. So if that's what people are telling you that they're more interested in, they don't want to talk about 1 and 2 year options. They want to talk about 1 and 2 day options. Then I think, oversight and regulatory matters, like they need to just keep an eye on it. But it seems to be where the interest is. And that's volume will speak. And that will be the true testament whether it works.
You have to go where the action is at the end of the day. Well, Thomas, I appreciate you joining us, taking some time out of your conference to catch us up on all things Clear Street. But before we go, we like to leave our audience wanting more. We touched on a few cool things you folks are working on, but if you have anything else up your sleeve, any interesting teases you could leave our audience for what they can look forward to coming down the pike from Clear Street, now is the time, sir. The floor is yours.
Yeah, no, I would just say, Clear Street, it's unlike any institution I've ever been a part of. It's a small and growing institution. And, we'd like to say that there are whiteboards all over the place with ideas and problems from customers that we're trying to solve in real time. And so, what are we trying to do? We're trying to bring solutions to the market quicker, faster, at a lower cost than some of our other competitors while providing exceptional service. So, we're going to be spending some more time on, the flow derivatives arena. We have built out futures capabilities. We are launching an enterprise overseas. So there's a lot coming from Clear Street, and we'll make sure to keep you up on a real-time basis with new developments.
And if folks want to check all this out for themselves, where should they go? What should they do?
Clearstreet.io is the centerpiece for everything. So you'll be able to see everything online. We're a fintech company, so real time online, that's the best way.
Got to have .io. .com is so 20th century. Got to have .io now. I should get optionsinsider.io. I haven't gotten around to that yet. That'll be after this conversation. We'll go do that. Well, Thomas, great meeting you here, and glad to see so many interesting things are cooking in the land of Clear Street. We'll look forward to seeing how all this plays out in the marketplace in the coming months.
Great. Thank you for having me.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.